Thank you for joining us. There's been ongoing efforts to make cross-border payments faster, cheaper, and more transparent to support growth, international trade, and financial inclusion. We've seen improvement, but there's still a long way to go. Not surprising that the G20 has made it a priority, and given the current pandemic, there's been a greater push for it. Given border controls, restrictions, and lockdowns, the push for more efficient cross-border payments has become even more important. The question is, how do we get there? How can we make the experience better? What roles can the various stakeholders in technology play? How should the global roadmap be? Well, it is my privilege to introduce our speakers today. Victoria Cleland is chair of the CPMI Task Force on Cross-Border Payments. Victoria is also Executive Director for Banking, Payments and Innovation at the Bank of England. Diane Reyes, Group General Manager, Global Head of Liquidity and Cash Management at HSBC. David Watson is Chief Strategy Officer at SWIFT. And Paul Stoddard is President of New Payment Platforms at MasterCard. Thank you for joining us. Now, let's start with the current trends that we're seeing in the cross-border payment space. Victoria, we've seen a lot of change over the last 3 to 5 years, but key challenges remain. Take us through some of these challenges and why they remain a problem today.
You're absolutely right. I mean, cross-border payments are incredibly important, but compared to domestic, we're still seeing that they're slower, they're more expensive, they're less transparent, and they're less easy to access. And with more and more people sort of moving globally and reliant on cross-border payments, we really do need to improve the situation. I'm not sure they'll ever get to be quite as strong as domestic payments. There are more complications, so you've got much longer transaction trains. They're going through multiple time zones with often inconsistent system opening hours, multiple compliance checks, also poor data. So we know about 60% of them need manual intervention. So there is a lot that needs to be resolved, but the price is really high. The prize is really high. We know that, for example, some remittance payments can cost 20% of the value of that payment. Even though great improvements have been made, for example, some of the data from Swift GPI, we still find that less than half of the payments are settled in 24 hours. So I think if we can improve the transparency, improve the speed, improve the cost, it will make a really big difference to citizens worldwide, help economic growth and international trade, and ultimately global development.
We'll try to unpack some of those issues slightly later. For now, though, what have you seen happening in the cross-border payment space, and what's been the impact of COVID-19?
So at the moment, cross-border payments, they are phenomenal values. They're in 2017, they're about $150 trillion and expected to rise by another $100 trillion within 10 years. During COVID-19 in the UK, where I look through the payment systems there, we've seen a reduction in our cross-border and domestic payments. But I think it's fair to say that the volumes of cross-border payments have been picking up more quickly than the domestic ones, which is demonstrating their real centrality to the global economy. Going outside the UK, we've seen global remittance numbers going down by approximately 20%. So these are big changes. But I think just because the cross-border payment numbers seem to be going down at what is a very, very challenging time for the whole economy, it doesn't mean that we shouldn't be there to really try and solve them. As economies try and recover from the pandemic, I think it's going to be even more important that the payment systems are there to support, to remove frictions and make things better and not in any way be seen as a hindrance.
Paul, at MasterCard, what are you seeing in cross-border payments over the last 12, 24 months? And how has COVID-19 impacted areas like remittances, as explained by Victoria earlier?
Yeah, I think when we look at cross-border through the card and non-card lenses, so obviously on the card lens side, MasterCard has seen, as I think most of us have seen, cross-border transactions reduce significantly. We're not traveling for pleasure or business, and that is having a direct impact on the card side. But businesses are still trading, and there are very specific remittance corridors that continue to operate, and e-commerce is growing and has grown faster during the COVID crisis. So there are lots of puts and takes. We obviously participate in all these flows, and we think a sort of diversified model is the best model to approach this with. A lot of our customers on the non-card side are also banks looking to extend their reach of their own capabilities. So, on balance, it's a net down, but it's not too dramatic. And indeed, in some corridors, some flows, some transaction sizes, we've actually seen significant incremental growth. So it's mixed, I would say. I think we've got to continue to ensure that we are enabling our customers to do business if they want to do business, and how we respond to the no traveling from a personal and a business perspective, I think means we can spend a little more of that time maybe focused on the customer segments that have seen significant increase in usage during these difficult times. On the whole, I think there's a huge runway of growth for cross-border payments for all the reasons Victoria mentioned. As a world, we continue to grow, economies grow, and international trade continues to grow. And so I think it's in all of our responsibilities to try and improve on a continual basis, and our customers can benefit and trade more.
There is a silver lining, right, Paul? I mean, you say that the pandemic has led to better partnerships with the banks. Banks are recognizing the value of strategic partners more now than before. Why is that? Take us through the changing dynamics.
Yeah. I think in times of challenge, we all look to be able to continue to do what we always did. But, we're also put under pressure to make changes and to think of new ways of doing things, whether that's to reduce cost or increase revenues to supplement areas where we've lost revenues. And so, under that broad innovation banner, I think the world is moving down a path of where a focus on specialization and core competence is ever more important. And so what we've started to see, it was, I think, accelerated by COVID or accentuated by COVID in the same way that some of the other trends we've seen globally have been accelerated by COVID, that the partnerships bring together parties who are playing to their strengths. And so, we've seen banks, for example, really focus on what they do well with their customers, recognizing that they can't do everything well. And actually, if they want to deliver that really positive, superior performance and proposition to their customer, actually, they can trade off some control for that improved experience for the end customer. And so we've really seen our partnerships with banks in the cross-border space take off during COVID, and volumes flow very strongly in those partnerships, where we're bringing something to the table that perhaps wasn't there before. And likewise, we're not trying to do everything either. We don't serve directly the end customer. We don't want to compete with our bank customers. And so those partnerships, for me, seem to be working better during these times of stress. And it would be great to see them continue. And obviously, we're working on how do we ensure that our customers and non-bank FIs, for that matter, can continue to benefit and grow from that partnership, and we can bring more to that partnership for when we come out of this time. If we come out of it anytime soon, who knows?
Maybe not anytime soon, but we'll come out of it, Paul. Diane, how have banks adjusted and responded to the demands of cross-border payments? What major pain points have you had to address?
So let me back up and confirm with a different source, a SWIFT payments analyzer that we use at HSBC to monitor volumes, that in fact what Victoria said we've seen a drop in cross-border volumes. It started late last year, but in the April 2020 timeframe, we saw a 20% decline over the prior month. So that was sort of the biggest drop in volumes. And we have then seemed to see a little recovery month after month. So we are optimistic that we're heading into hopefully, pandemic volumes. And while this drop was expected, I think it's important to talk about the fact that there have been cross-border payments for certain goods, such as medical supplies that can't be truly sourced in a domestic market. You will remember at the start of the pandemic, there was this surge for personal protective equipment for the frontline workers. And the SWIFT GPI capability that was a true innovation and brought out for all of us by SWIFT, one couldn't have foreseen the immediate demand that would happen during COVID. So what we found is customers and banks alike were using this, customers because they want to make sure that they receive the funds for those supplies that they were sending, for example, from China to hospitals in Italy. But we also, as a bank, used it to help expedite those shipments so that we could get them to the frontline workers. So I guess in summary on this question, I'd like to say that innovation through the industry consortium of SWIFT has helped all of us bring something really timely and move the needle during this period, and it couldn't have been anticipated beforehand.
So COVID-19 has accelerated innovation at banks, Diane.
No, definitely. And I would say the biggest acceleration, the most pronounced acceleration is in the area of the digital usage and adoption. It's really been quite incredible. We have many customers, for example, and proof points where we tried to get, for example, some of these customers to use our electronic payments previously, even as a contingency, and they wouldn't do it. And then the burning demand came about as a result of COVID. And one of our customers, who for 8 years wouldn't move to electronic payments, called and said, can we please have this? And can we please have it in, a day or two? And of course, we obliged. But we've seen many other shifts in usage, some more proof points. For example, we have an HSBC Net mobile app, as all of our banks do. And we saw a 157% increase in downloads of this app in the first quarter of this year over the prior year. So it was quite incredible usage. And on top of the downloading of the apps, we'd seen our mobile volumes and values increase. The values went up 157%, and the volumes went up 43%. So customers were really using every device available to them to be able to, make payments on the fly and as needed and as secure as possible. But we also saw a lot of usage of things that we call self-service. So what we did is we mass enabled our capabilities on the liquidity management dashboard so customers would know what cash did they have on hand. But we also gave them cash flow forecasting, and we accelerated a functionality we were going to bring out later. So not just did they know what they have today, but they could actually forecast where they were going to be in a week, a month, or even further. And these were really helpful. We also allowed our customers to adopt Adobe Live Sign so that we didn't need paper sent with signatures on them. And we modified any types of email that clients would have sent through in order to make sure we mitigated risk. Perhaps the one interesting, and I'll stick with my last example, which is many customers left those tokens, those devices that we used to dial in with our code at the office, and most did not want to go back. So we ended up automating this process, and we rolled out a secure token capability called soft token. And we've actually had to send out 150,000 soft token access points to our customers. So I would say digital adoption is really on the rise at a huge surge.
Especially in a time of crisis. David, Diane talked about how GPI has to an extent been a game changer, but it's not the end game. What's GPI telling us? What still needs to be done for better client experience?
Yeah, it's been a very interesting to look at the GPI data in recent times. And I think to me, GPI has been a great step forward, and particularly in that sense of giving us the transparency around where we actually still need to improve. So to me, it's a phenomenal step forward, but it's an early step in what is a continued evolution of how we improve the industry. We're seeing clearly now from stats like we've shared from some of my colleagues on the panel today, and we've also seen, 38% of payments happening under 30 minutes. We're seeing on particular corridors like US and UK that maybe 72% of payments on Swift GPI happen in under 30 minutes, related, I suppose, to different market differences and different controls, but really enabling us to actually understand where the problems really are. So whereas before we were maybe sitting in a perception-based assessment of cross-border payments, I think it takes too long, or I think it's fine, or I think it's too expensive, or I think it's an acceptable competitive cost. cost, or there were differing viewpoints, often based on perception or unique single experiences. What GPI has done is enable us to actually take a move to say, okay, this is good, this is acceptable, this is an area that needs work as an industry, and actually allow us to sort of sit down and say, okay, if the market trends we're seeing around cost, around ongoing regulation, around increased unmet customer needs of price, speed, predictability of price and speed, the introduction of new closed loop players in the payments, securities, foreign exchange, liquidity space that is enhancing many aspects of the value chain, all combined together have been accentuated by what's happened in the last 6 to 9 months around COVID, and actually helped us realize that things that we were using GPI data for to sort of start to understand what we need to do next as an industry together, actually many of those things need to be accelerated even faster.
We talk about the acceleration in e-commerce, cross-border payments, work-from-home arrangements. They've all coincided in a way with the rise in cybersecurity issues as well. What insights are there on the evolving threats?
Yeah, it's definitely been a poignant time, in the sense that when you see a large increase in digital payment usage, and actually an increase in particularly in areas where people who have perhaps used other methods start using different types of digital payments, whatever they may be, leads to, of course, potential manual error at the front end of a process, as well as potential other entry points for the cyber landscape. So to me, this is actually a time to continue what we've been doing, before, both with, our customer security program, many other cybersecurity initiatives that are out there in the industry, to actually continually tighten ourselves on this and actually continue to improve on it as we move to an even more digital ecosystem that I personally believe will continue to get more digital. And I think the panelists are saying the same thing as I there. We'll see more of this digitalization over time, that actually that cyber conversation gets even more important than it is today, which is already number one on the list.
I guess we'll take the discussion into what can be done to make cross-border payments better. Victoria, the CPMI has come out with a report on ways to enhance the cross-border payment system. What are some of the key takeaways?
So, the work that the CPMI has been doing is really trying to get beneath the skin of what are the issues around cross-border payments. And we've heard from the other panelists some of those. And sadly, there isn't a single bullet. It isn't just an issue that you can solve by changing the infrastructure. It isn't just a regulatory issue. It's not just an AML issue. So what the CPMI have been doing is really taking a holistic view. What are the number of things that need to be done? What are the interdependencies between them? So we've developed a list of 19 building blocks. I won't go through each of them in turn, but they fall into 5 key focus areas, as we call them. One is around setting a sort of clear commitment from the public and the private sector in terms of the vision for what good looks like. What sort of targets should we be setting for cross-border payments? Another focus area is around getting greater global coordination around regulation, supervision, and oversight arrangements. And here I'm not just talking about sort of oversight of a particular intermediary, but it's also looking at sort of oversight arrangements around know your customer and compliance. These are things that can slow payments down if they're not consistent. Another really important focus area, and particular focus for central banks, is around how to improve the existing infrastructure. So can we get greater comparability in terms of operating hours? If we increase access to the real-time gross settlement systems to more players, that should hopefully improve these areas. Looking at sort of greater payments versus payment potential. So changing the existing infrastructure to really understand who the players are, enable them to operate much more 24/7. Another area of really important focus is around data. So having greater harmonization, so ISO 20022 could be really important here, but also looking at sort of legal entity identifiers, greater use of APIs to try and get rid of some of these real problems in terms of slowing it down, so much manual intervention. If you've got good data and know how to use it properly, we think that's a really important area. And then the final focus area is much more exploratory. It's looking at, for example, central bank issued digital currencies, stable coins, or even saying, is there something completely different out there, for example, a sort of multilateral platform. And that isn't going to happen quickly. And if some of those big changes were to take place, they'd still need those earlier sort of focus areas to be in place. Whatever you want the solution to be, you've got to sort of crack some of these multiple compliance issues. For example, a payment going from London to Vietnam goes through 16 different stages. Most of those will be a separate compliance check. So is there more that can be done to take those various frictions out of it? So as I say, sadly, no silver bullet, but if we pull together these 19 building blocks, I think that joint public-private sector collaboration can make a really big difference here.
These key takeaways, Diane, they are aligned with banks, with what banks want, but they sound really challenging.
Yeah, I would agree. I think what banks really want in the cross-border payment arena is for these payments to be as fast, as safe, and as secure as domestic payments. And if you think about it, our clients actually don't distinguish between a cross-border and a domestic payment. They just want the money to move from point A to point B. So in the end, I believe the big challenge that we're experiencing here is the lack of consistency. So, for example, it would be helpful if the regulators had a consistent approach to cross-border in, for example, sanction screening. Another example might be how we operate the national payment scheme. So what are the rules in those schemes and what are the cutoff times? And finally, I think the data that's attached that goes along with each and every payment, I think it's vital. And this is why the adoption of ISO 20022 should be instrumental in helping all of us apply common data standards. So I think these improvements will, in fact, help. But I believe if the central banks are involved, we have a much higher likelihood of success. They establish a framework, a coordination, and a communication approach around the world. And they have a key role in fostering innovation. And from what I've experienced, they've done a great job in this regard. And they've also helped us to explore new technology. Victoria mentioned central bank digital currencies, and I think that this is a great example. In 2018, HSBC worked with the Monetary Authority of Singapore, with the Bank of Canada, and of course with the Bank of England to assess the role of central bank digital currencies for cross-border payments, a project called UBIN. And the key finding was that technology is not an obstacle. It's really already available and lots of it out there. The challenge is really the practical applications in the ecosystem, like liquidity, like standards, and of course, like resolution. But as Victoria will be familiar with, a great analogy that I think can be applied here is the College of Regulators working in crisis management, addressing supervisory issues such as recovery and resolution planning for GSIBs. These colleges are exceptionally effective because they share information amongst all banks and amongst themselves, and this can facilitate shared solutions for the market. Similarly, the Financial Stability Board could help to tackle cross-border challenges that are stemming from inconsistent policies and procedures in the national payment schemes. Thank you.
Paul, what's your take on it from a PSB perspective?
Yeah. I agree with a lot of Victoria and Diane's comments. I think the data piece is critical. So as you probably know, we operate a number of domestic instant clearing systems. So, and all of those that we're putting in now around the world are ISO 20022 based. So, we completely agree that standard is critical, and driving that standard from domestic into cross-border, so that we can do a cross-border instant payment in the same way we can do a domestic instant payment is absolutely our goal. So I think increasing access is a very interesting topic that often polarizes audiences. I've heard a lot of strong arguments for expanding access to payment systems, non-banks and so forth, and some markets have done that. I've equally heard very, very strong arguments from banks why that shouldn't be the case. And having spent 20 years in the banks, I completely understand that. But the point around, I think the role that the central bank should focus on is achieving that harmonization of regulation, supervision, AML, KYC. I think central banks have to be a little bit careful not to step into the domain of the commercial banks. Breaking down that system, I don't think is a good idea. A number of banks, particularly in Asia and Middle East and Africa, feel very strongly about central banks not participating too directly, because it really does target their revenue streams. So, obviously we work very closely with central banks in the implementation of the domestic payment systems. So, in the development of RTGS systems in particular, their evolution and CBDCs are two particular evolutions that I think MasterCard is very keen to participate in. Our CBDC sandbox is already being used much more than we thought it was going to be, as we can see the interest level rising in general. I think we're doing all the things that we need to be doing. Like everything, everyone wants them to be done faster, and trying to bring that sort of global collaboration together more in a time of crisis is a very hard thing to do. And so, as I said, we're doing all the right things. I think we've got to continue to make the progress in the areas that we've talked about.
David, Victoria talked about the building blocks, payment standards, API standards. How is SWIFT positioned to help advance these building blocks?
Yeah, I mean, our role as a cooperative, is really to help facilitate the network and the community drive forward on this journey. And I think what's really key for us is our role around standards is an important one today and will continue to be in the future. I think there's more we can do around standards, making it, in essence, easier to have instant and frictionless cross-border transactions and cross-border payments in particular is driven by the ability for us all to interact and engage very simply and very easily. And actually to do that, however we do that, enabling us to do that in the same language, in the same way, with the same standard type of messaging is incredibly important. And as we evolve potentially from messaging to transaction management and other activities together as a community, really enabling us to constantly have that interaction and speaking in the same way, the same sort of method, is incredibly important. And doing so, particularly that you help facilitate the fastest movers of innovation without disadvantaging those who may move a bit slower, is incredibly important for us as a community. And part of the role we'll play is to have a real facilitation of that innovation, responsible innovation into the ecosystem by the banks, by other direct members, by the community and network as a whole, while at the same time having that backwards compatibility back to the way we do things today. That really helps us as an industry keep all the benefits of what we have, while also improving to mitigate market problems and capture new opportunities that we've spoken about earlier on this panel. And I think for me, SWIFT has a strong role to play there, but it's not a role we play in isolation. It's one really that we cannot change financial services unless we all look to how we can change it together and in different aspects in different ways, but how we maintain then interoperability across that as these things move forward.
We heard earlier from Paul and Diane about how central banks play a key role in fostering the safety and efficiency of payments, both at the domestic and cross-border levels. Victoria, how do you see central banks take the lead in innovation? Add to that, what's being done to drive innovation at the Bank of England?
I mean, it's great to hear Paul and Diane talking and seeing the important role that a central bank can play in this. I should also add that the work that we've been doing as part of the G20, it's not just central banks, it includes the Financial Stability Board, FATFA, a number of other organisations as well. So almost sort of copying David's point, it's not something that any one organisation or any one type of organisation can do alone. It really does need to be a partnership. Central banks have a number of really important roles to play, though, and we will all the time be trying to balance that real safety side of it and financial stability with the efficiency and getting those gains. So that's something we'll be looking at it. Through a lens, both as an operator, so central banks run real-time gross settlement systems, but also as a supervisor and regulator. And I think the points I've been hearing from the other panellists really pull at both of those. So if I focus initially on central banks as operators, and I think this is an area where a lot of building blocks are really getting to the heart of particularly some of Diane's wish list in terms of operating hours are there as seen as a really important building block, pushing forward with ISO. Paul mentioned access. So these are things that we're trying to move the bar on. So in the UK, we're in the process of renewing our real-time gross settlement system. One of the things that we're doing there is to make it sort of ready so it could be compatible 24/7 if that's what the industry are demanding. We've already changed our policy to enable non-bank payment service providers to join the real-time gross settlement system, and as part of the renewal programme we're actually going to make it much more easier technically in terms of the various sort of testing issues. As part of that we're moving to ISO 20022. We're also pushing forward on legal entity identifiers in part of the sort of standards and messaging. So there's a lot that we're doing in the UK, but we're also trying to think we need to be ready for the future. We've decided not to build our own system on distributed ledger technology, but we're building in the capacity and the capability so that if people with DLT want to join the system, they can join it. We're taking a much more modular approach to the build so that if we see things changing, we can then add those on. So we're trying to think now what is needed, how can we push forward, how can we open up to more competition, what more data can we give? So we're going to introduce read-write APIs in the new system. So to try and make it as user-friendly for as many people as possible. So that's some of the things we're doing as an operator. We're also a regulator and a supervisor of this financial market intermediaries, but also banks as well. And through that lens, it's looking. So we are looking carefully at sort of stable coins. What does that mean? Pulling on to Diane's point in terms of the importance of cooperation and coordination. I think the fact that these building blocks have been drawn together across a whole range of central banks, a couple of the key building blocks do talk much more about consistency and harmonization. I think that is a way forward. So we're trying to look at it through a number of different angles to be ready for the sort of technology that we're seeing at the moment, but also make ourselves much more future-proof for going forward.
How do you respond to that, Diane? How do you see central banks playing a role, whether in terms of trying to expedite the whole process or be more innovative?
Yeah, I think I addressed this earlier. I believe they have been. I've seen some great sandbox experiences, albeit I will caveat that with saying these sandboxes should be for all participants, not just new entrants or fintechs. And in the beginning, I think there was a feeling of excluding quote unquote legacy banks, but we're also innovating. So we need to participate and learn within that sandbox. I think the innovation around experimenting with technologies and choosing, for example, in one of the regions I talked about a specific DLT platform and seeing how it works. Actually, the one central bank picked 3, and then we were all able to experiment. And then publishing documents as far as, what are the outcomes and findings so that the rest of us can learn from whomever participated before and not repeat similar mistakes. So I think there's a huge role for them in innovation, along with the private sector, because we all need to get something out there that our customers want. And we need to push our customers and give them reason to want to do cross-border payments in a technology proficient manner. And that's what they're looking for. So I think, it's a collective effort, but the central banks and, as Victoria said, the whole ecosystem is helpful here. And there are a lot of software companies. I think earlier, we heard about partnerships, of course, and I think that is Paul had mentioned, I've seen a rise in partnerships and willingness to coordinate and cooperate during COVID. I think what was great about COVID is people put aside the competitive nature of everything, and we were all in it together. And I think that's what we want to have happen in this regard.
Paul, when we talk about faster real-time payment services, it's more about data, isn't it? Access to the data. What are you looking at?
Yeah. I mean, I think data-only transactions, they already dwarf payment transactions, and that will just increase tenfold over the next few years. So both at the domestic payment system level and at the cross-border level, I think the data aspects are going to become really the primary area of focus as the payment transaction itself becomes arguably more and more commoditized. So the capacity to transport and run analytics and process, and then something like open banking, for example, we're already seeing most of the open banking ecosystem transactions are not payment related at the moment. So it's the AISP aspect of open banking, and I think that tells a story. There's so much data/information available now. Around that needs to be the right controls, the right security, the right permissioning frameworks, and so on. And the transactions themselves, if indeed a payment is requested or initiated at the end of that, it's kind of a byproduct. But historically, the data around the payment has typically traveled on a separate path to the payment because it's had to, because the payment systems haven't been able to cope with that. But now you can carry almost unlimited, subject to performance and security and the other things. And so I think really we're going to see that explosion, and we're going to see open banking become open finance and just become open data. So if you are, as an institution, holding data on a consumer or a business, you better be ready to make access to that available to anybody that's got the permission of the data owner. That's a big step from where we are now. So I do think that the revolution, if there is one, is likely to be in the data rather than necessarily in the payment. But that then puts an added impetus on us payment technology providers to make sure that just works, because the tolerance level for problems within a part of a solution that just has to work, I think will reduce even further. So resilience, some of the things Victoria mentioned, resilience and the ability to recover from an issue when it happens, and how quickly can you recover, how quickly can you make available those services, and also how do you provision for significant uptake and usage of a service. And oddly enough, that's a risk that we're seeing more than we've seen before. Some of the new services we launch and some of our partners launch suddenly get enormous volumes pushed through them that are not necessarily anticipated. And so that kind of risk profile is very different from the risks that we've dealt with before. So it is all about the data, but it also puts, I think, added pressure and impetus on the resilience and performance planning and the safety and security that we've talked about before.
David, what is the strategy at Swift to try and work out the frictions in the payment space?
Yeah, our goal is very much, I think, as published recently, is to help facilitate the community and the network with instant and frictionless payments. I mean, for us, it's why were we created many, many years ago by the banks back in the 70s, was to tackle how to make cross-border interactions easier and simpler, and move towards something of a more electronic model to replace telexes. And that industry change was at a certain point in time. That was a journey everyone wanted to go on. And I think where we stand right now is a little bit of a similar juncture, where that same evolution is started some time ago, will continue for a bit longer, but it's kind of where we all are. Therefore, we have spent a lot of time listening to our membership, listening to the network, watching what's happening across the what is a much wider and much bigger payment spectrum of players than there was back then, to understand what we should do as a cooperative and how we can help facilitate banks and facilitate the wider community really go on this journey. And for us, that evolution from messaging towards transaction management, that evolution from passing pieces of information from A to B to C to D, and actually I think, as Paul touched on, the importance of the data that comes with that, and how that really needs to be front and center of the actual cross-border payment transaction, rather than a separate afterthought or a separate thread, is something that made us come to the conclusion that the evolution from messaging towards the direction of transaction management, allowing players to access data at the same time rather than sequentially, to understand always the integrity of that data. Can you trust it? Do you know who did what to it, where and when? that actually allows you to understand how you use it for your part of the process or what your end game is critical. And that role we can play as really driving the fundamental facilitation of instant and frictionless transactions across financial markets for us is incredibly key. We've done it historically between different closed loop domestic networks. And as we see more and more interesting things happening, attacking certain specific problems like I spoke to before in the different industry segments, our role of how we can help facilitate that, not dissimilar to what Victoria said, regardless to what those players are doing, whether they're on DLT or they're on messaging or they're on API direct connectivity to their own backends, whatever it is, we are there to then facilitate the management of that transaction cross-border, and people can then use it as they see fit for that business. And for us, it's funny. I often say that if you were to sort of look 10 years ago and look 10 years into the future and compare those 2 points in time, it really would come across as a revolution. But actually, this is an evolution that started a few years ago and will continue for a few years, that actually will see us move towards that as a community.
Well, if you ask Paul, he'll say it is definitely not a revolution. He told me that yesterday. We talked about how new technology brings answers to many of the issues in the payments in Victoria. We have big tech expanding into the payments and currency space. How are the new entrants doing it? Are they doing it better? Are they doing it in a more compliant way?
I think the balance of compliance between different organizations and requirements has led to the perception at times of an imbalance on new players versus legacy players. And I think depending on which side you ask may depend on the answer then you then get, where someone who's been around in the business for quite some time has, their own infrastructure, can easily say, well, if I have to make changes to adhere to a new piece of regulation, I perhaps have a large investment number back to how I understand how I comply to that. Similarly, a new player has to perhaps address new things that are coming through or different types of scrutiny and engagement. So there's definitely a feeling that the playing field is mixed. Some of that is perception. Some of that is reality. But I think what's important is that we all share the same end goal. And I think that's what we see certainly in our role as the cooperative, is we understand that everyone wants the same thing, which is they want to have safety and security in the data they have. They want to ensure that transactions happen in the most efficient, fastest, frictionless manner, but they go to the right places and that they're not being corrupted, and that so-called bad players that can't access the chain and take advantage of that. And that's the reason for compliance. That's the reason why we have various levels of engagement in the movement of international money, and why it will continue to be important across the entire market.
Victoria, what's your take on these new entrants in the cross-border payment space?
I think they've got an opportunity to make a really, really big difference. And I think some of the work that we've been trying to do is to enable as much of a level playing field as possible. But we need to be wary, both in terms of promoting innovation and encouraging them. I mean, there's been talk earlier about sandpits and things, but we also need to be very alert to the potential risks that they might be running to the broader ecosystem, to the consumers who are using them. So I think that what we need to be thinking about collectively is what is the best environment to promote new players, new users, and to get as much harmonization across them as we can. I think one of the really key themes of the work that CPMI and others have been doing to improve cross-border payments, a lot of it gets down to greater harmonization or consistency and compatibility. And if we've got new players coming in, we need to make sure that they can fit into the ecosystem in that same way.
What's your take, Diane, in terms of how banks are responding to these new players and how banks are investing the most? Where are banks investing the most in payments? How are they fighting back?
So I think that banks are responding differently to different players. It was a time in which fintechs were sort of going to replace financial institutions. That's probably 5 years ago was the thought process. But in fact, I think because of the customer base that traditional legacy banks and others have had, The fintechs have partnered closely with us, and we're happy to take some of their technology and integrate it with the end-to-end process that we're working on already for our clients. We're willing to adapt some of their ideas and some of their developments for sure. There's also big techs, and we are trying to blend our ecosystems together to, where they might own customers, but they need our payment settlement capability. And then there's traditional banks. And I think that we're all in this together. We're all trying to deliver a better end product for the customers and for the market as a whole, and to take friction out of the system. And part of it is cooperation, and part of it is competition. When we see competition, that puts everybody on their game and makes sure that they come up with new feature functionality, for example, insights into the payment that they wouldn't have had before, to make it more important to the customers to get the right service from the banks that they need, and to be able to anticipate the future payment trends. Where are we putting our investment? I guess it's across the spectrum. I mean, we heard a lot of conversation about real-time payments. And we've made investments into 19 domestic real-time payment systems in the last couple of years. And when we do this, we don't just go live under the minimum requirements. We bring out value-add capabilities. In one of the countries, we allowed access through 5 different channels, including point-of-sale QR codes, which is, I think it was a first. And we're looking at going back into other markets and seeing whether we should enhance the options available in the real-time payment systems. But we're also offering virtual accounts, and we're offering a variety of liquidity, capabilities for customers that have made a payment to know what's left in the account and what they can do and get maximum yield. So I mentioned earlier some of our liquidity portal and cash flow forecasting. I think there's just, this is a time in which investment is at an all-time high and needs to continue to be. But let's not forget the importance of the infrastructure that Paul mentioned, and the whole notion of resilience. I mean, you need to recover, and you need to recover immediately for your customers. Nowadays, there's so much volume and value going through that you can't afford to be out for any long period of time. And so you've got to have that infrastructure fail over quickly to a new contingency site, and then, of course, cybersecurity. So I'd say it's going to be an interesting period in front of us, because one has to invest at an all-time high. Because it's not just new enhancements, but it's making sure you're fit for purpose to keep running properly and safely.
Paul, is there a trade-off between innovation and financial stability?
If there is, I haven't found the perfect answer yet. But of course, we do have to make that trade-off every day. We have to continue to invest in new product development for our customers, that's meeting the changing needs of a new environment, greater digital, etc. But equally, the new risks come along with that. We can build technology. You can build anything with technology, which means it isn't always about the technology. That obviously plays an important role. People do business with people. Ironically, in an ever more technology digital world, payments is very much about trust, and business is about trust between people. When you can't be in the same room, COVID has brought that to everybody's attention. Can you still develop and build on, establish and build on a trusted relationship to a conclusion? And so I think these are all the factors that we're going to be wrestling with over the next few years. And the intensity and the pace of that change, and the demand for innovation, and everything being now, instant payment systems is great. You can't get much faster than instant, but I feel like sometimes people are demanding that. They're demanding something that's even more than now and instant. So yeah, it's a fine line that we have to walk all the time. I think we're doing a good job. We are all presenting ourselves to the market and to our customers in a strong and positive way. And there is a lot of opportunity out there, and our customers see that opportunity. And the world is a smaller place as a result of the new technology. So we'll continue to walk the fine line, I'm sure.
We're in the final minutes of the discussion. I just want to do a bit of a reality check. Victoria, let's start with you. How much progress do you think can be achieved between now and 2025, realistically?
Probably a lot. Realistically, I think my expectations have gone up since the start of this panel discussion, actually. I think one of the things I've been really struck by is the desire of panel members to really make a difference, hearing about some of the great stuff they've been doing in response to COVID, Diana's points about sort of digital adoption. I think all of that is setting a really great ground to move this forward on. 2025 will have changed some things. Some of the will have seen a lot of progress, for example, on ISO. I think we'll get greater coordination and consistency across a number of areas. I would very much hope we'll see some change in operating hours. There'll be some things that, while we won't necessarily have changed, there will be a framework and a mechanism there to know how to change it. But I think to really make this a success, it has got to be this collaboration between the public and the private sector. But listening to the panel today, I think we've got some very clear common goals, which is really great. And we've got G20 behind it.
Diane?
Yeah, I would agree. I believe we can make significant progress in the next 5 years, but I think it would be helpful to take a pragmatic and certainly a collaborative approach, which everyone has talked about. If we consider the fact that 80% of cross-border payments come from three currencies, the US dollar, the euro, and the pound, if we could align our standards across these three jurisdictions and solve the majority of pain points for cross-border payments, I think this would make a huge step forward. And then we can, over time, go back and standardize approaches with other markets. Paul mentioned the ISO 2022 adoption, which will greatly help us all from a common data standard perspective. Let's remember SWIFT and Target 2 will adopt these standards in November 2022. And the US Fed and CHIPS are going in early 2023. So we see the markets moving in the right direction to make this more feasible. I do feel that we can have a definite step change by 2025 if we all work together and provide value add capabilities to drive our clients to adopt this.
David?
Yeah, for me, I think I agree that there will definitely be, we will see a big change between now and 2025. I don't necessarily see 2025 as the end. I think I see it as another step on a journey to continually get better. And I think there'll still be more for us all to do together. But I do think particularly some of the milestones that Diane laid out, there's some real progress to be had. And if I was to kind of summarize even just this sample of what we have here with the panelists on this conversation, you know, we're all customers of each other. We're all providers to each other. Potentially, you know, there's potentially areas where we all may compete. There's potentially areas where we could, you know, all collaborate, and that applies either as a group or bilaterally. And I think that ecosystem that we have, where we do have customer relationships, provider relationships, competitor relationships, collaboration relationships, really comes together when you think at the end of the day, we all kind of have the same goal, which is that things get better and easier for the end customer. And actually that is actually what will help us have healthy competition, have healthy relationships, and have healthy views around how we might move things forward. And I don't think it'll be an easy journey to 2025. I definitely don't underestimate it, but I'm very optimistic about it.
David, just elaborate on that public-private sector collaboration. Where do you see that happening? Or where would you like that to happen?
Yeah, I mean, to me, it happens all over our industry today. I think, can there be more of it? Yes. I think, you know, we are a cooperative. Diane works for a bank, Victoria for a central bank, you know, Paul for a corporation at PSP. I think there's an example here of how we all have shared goals as well as maybe our own specific goals related to that. And I think that's really, to me, is the driver. Specifically where, I think we already have a lot of these spaces. We talked about CPMI. We've spoken about various other positive things we're doing as an industry or as subsets or samples of the industry. And I think the fact that we've got, you know, 15,000 people together for a week at Sibos, I have to do a plug, of course. You know, it's a great opportunity for forums and pieces like this for us to continue that dialogue. And I only wish we could do it all in person. But actually, I think what's given me real comfort towards how we do this as a next stage and continue that healthy relationships is what we've done in the last 6 months as an industry and as human beings has been incredibly impressive. How we've adapted to this virtual world actually gives me, again, huge confidence that we will continue to improve our industry, however that is, from a virtual and physical landscape going forward, and whatever those forums may be.
And Paul, how much progress do you think can be made between now and 2025?
I think that depends on your perspective. I think a lot of progress can be made, or no progress can be made. There's a crisis currently facing all of us that's definitely impacting the way we do business, and there are businesses booming, there are businesses failing. It's a difficult time for some. It's a hugely exciting time for others. And so, I do think that, my point around partnerships and evolution, not revolution, I'll come back to. We talked about partnerships right at the start of the conversation. If we are able to forge those deep strategic partnerships, acknowledge where we're good and where we're not good, and that's the basis of the partnership, then I think we'll make enormous progress, verging on revolutionary progress. If we can't do that, if we all get a little bit tied up in our own world and protecting rather than opening up and being proactive and positive, then maybe we won't make so much progress. But I've also learned over my years that whenever a new innovation or a new environment is discussed, the ambition at the start of that discussion is normally very quickly quashed by a dose of reality. So things don't happen quickly in this industry, particularly in payments, because a lot of it relies on significant technology infrastructure investment. And that isn't something that can be delivered at a global scale in a short timeline. And so there are some very real barriers to the sort of progress that I think we'd all like to make. But the opportunity is there. It will be through only the fault of ourselves if we don't make the progress that we want to.
And on that note, we wrap up today's discussion. Paul, David, Diane, Victoria, thank you so much for your time today. It's been a pleasure.
Thank you.
Thank you.
Thank you, Aslinda.